So quick take, Alison. You always digest these things so quickly.
So quick take. It's magical how the overall trading is about right in line. So FICC a little better, equities a little worse, and I would say this is similar to what we saw at JP Morgan, which beat by a little bit, but again, coming in just a little bit better than expectations, which had been falling throughout the quarter. And what we're going to want to hear more about is what they're hearing from clients. Goldman Sachs makes more revenue than anyone from the M&A business. They probably have the best line into the boardroom. What are they hearing there? That business hopefully did well. There were some pretty bullish
Financial
estimates.
Advisory pulled in $887 million, beating estimates of $819 million. So the initial read on a preliminary basis does seem to indicate that they did pretty well there.
And then on the capital basis, they increased their dividend. That was sort of in line with their announcement last year with capital returns. So that's a positive. And it looks like their capital ratio coming in a little bit better, not seeing anything on the legal front. And obviously that's something that we're watching closely.
So, Jens, a lot of banks have been talking about the kind of dismal first quarter trading activity, given how much there was zero volatility and people were just depending on the central banks. What was your read? I mean, have you found that in general there is a lack of conviction that has led to a lack of trading? Because we're not seeing it in the earnings. I mean, there was some volume.
Yeah, well, we had a bounce in the market, but not necessarily everybody participated in that bounce. But I think there's also, in some of these businesses, there's a structural situation going on. Like there's a margin compression that's definitely happening in FICC and in equities. So that's the trend that is structural, is hitting everybody. So I think you're seeing that, and then you have volatility around that trend. That's the basic pattern.
So one question that I have, Alison, is to what extent are we seeing the bank pivot with new leadership, David Solomon, because the investment banking was up very nicely. It looks like that is part of what helped them a lot. Traditionally, we thought of them more as a FICC trading entity. Are they really, is this a pivot, or is it just responding to what's happening in the marketplace quarter to quarter?
I think, for the quarter, it's probably more about the environment. Trading, keep in mind that last year was a very strong quarter. It was a big rebound for Goldman. So it's was sort of expected that we would see lower revenues this quarter. I think we're going to hear more from management, perhaps during the conference season, in late May, early June. We are waiting to hear a little bit more about now, the sort of, he's going through the business, Solomon and his new team, what changes are going to make. We did see sort of a number of stories about headcount cuts in different businesses, so we are going to want to hear a little bit more from them. Was there something strategic going on there, like the commodities business, for example, or was that just sort of the normal annual culling of talent?